Welcome back. It's time for business with Matthew. Hello again, Matthew. Starting with Greece, it's finally going to get its money.
Yes, so we had this successful bond swap deal last week when investors agreed to cut effectively 75% off the value of their bonds. What's been happening this week is Eurozone governments and parliaments have been ratifying that deal, so this €130 billion package can be given to Greece. So that's happened. Final part of the jigsaw will actually be today when the IMF meets in Washington to confirm that it's happy for its €28 billion part of the programme also to go to Greece.
And what's Greece going to do when it gets that money?
Well, it's of course got lots of different bills to pay. One of the most important things it actually needs to do is help recapitalise its own banks, because they were part of this bond swap that happened or that was agreed last week. So it'd be quite important just to make sure that they are in good shape for the future.
Meanwhile, there's a renewed focus on Portugal.
Yes, there is. So Portugal as well, of course, has had a bailout, €78 billion bailout from the EU and IMF. But the EU's very keen this time to make sure that they don't suffer the same sorts of problems that we've had with Greece. Olli Rehn, who's the EU's Monetary Affairs Commissioner, has been meeting the Prime Minister and the Finance Minister this week. And he was making the point that Portugal is very different to Greece. Let's take a look at what he said.
First of all, the debt burden is not at all in the same scale, same magnitude. Second, there is a strong and broad political consensus backing the programme from the start, and this has meant that the implementation of the programme has been on track in the past year, and I trust that it will remain on track also in the future.
And how are the markets looking this morning?
Well, it's a bit of a mixed picture, at least over in Asia. Let's take a look at markets there. The Nikkei's closed now. Other markets still open, but the Nikkei was actually up in positive territory today. That weakening yen is still giving is helping exporters or investors and exporters feel that there's good news there. So the Nikkei doing well. We can also look. Hopefully, we can look at the US market. So there's Asia. Yeah, Nikkei in the green. And if we take a look at the US markets, we can see yesterday trading was a bit positive, bit negative. I was going to mention as well that Italy was back in the bond markets yesterday. Do you remember when we always used to look at Italy bonds sales and see what was happening with them? And they've gone out of the news a little bit, partly because there's been good news. We can see there how the yields really rose up to that dangerous 7% level. They've dropped right back down now to around 4.86% in a sale yesterday. That just goes to show this renewed confidence in how Italy is now being managed and how things are going there.
All right, now on Tuesday, Hungary was told it wouldn't get €500 million of much needed funds unless it gets its budget deficit under 3%. Prime Minister Viktor Orban is also in a dispute with the EU and the IMF over a new constitution. So how is the country coping with these financial problems? Our Budapest correspondent Gulliver Cragg has the story.
Budapest's trams are creaking under the weight of debt. The city can't afford the tens of millions of euros owed by its transport company, a situation that some say could push the whole country under.
If the largest municipality of a country is in bankruptcy and the state has no money to save it, then the state is in bankruptcy.
For now, the state has guaranteed an extension on the loans, but there's no long-term solution in sight. Metro passengers had mixed views about their government's economic competence.
The main problem is that they just don't know what they're doing. They're doing even the opposite of what they promised.
I fully support the government and its decision to tax multinationals and also banks very heavily.
Big taxes on big firms and banks brought Hungary's deficit within the EU limit of 3% of GDP last year. But as those measures were temporary, the EU says they don't count. Hence the suspension of European Cohesion Fund payments to Budapest. Yet as the Organisation for Economic Cooperation and Development presented its own critical report on Hungary's economy, Junior Minister Zoltán Cefalvai shrugged off the problems.
The Hungarian government is committed and determined to keep the budget deficit below 3% in this year and also the next year.
In presenting the report, the OECD's Andrew Dean said himself he felt it was like spitting into the wind, though he did strive to sound a note of optimism.
The wind can sometimes change, and things change, governments change. They may adopt policies which initially they thought wouldn't be that useful.
The OECD recommends that Hungary secure a credit line from the IMF and EU as soon as possible. But so far, the government has not even met the conditions to start talks. Perhaps it feels the country can stay afloat without assistance. Many economists disagree.
Let's pick up on a few more of the day's business stories. A 20-year trade war between the EU, the US and Canada over beef has finally been settled. A row over growth hormones used on North American cattle ranchers sparked the ban in 1988. The new agreement will set an annual quota for the import of beef that hasn't been treated with the hormones. In return, the US and Canada will lift import tariffs on a range of European goods, including chocolate, cheese and jam.
Credit ratings agency Fitch has lowered its outlook for the UK, while Britain will keep its AAA credit rating for now. The agency said the outlook has gone from stable to negative. Fitch said the UK is limited in its ability to absorb any further economic shocks stemming from the European economic crisis.
And the chief executive of Tesco's UK operations, Richard Brasher, is stepping down. According to the Financial Times, the country's biggest retailer has been battling to improve its performance in its home market after the first profit warning in 20 years. Brasher is reported to have clashed with Group Chief Executive Philip Clark, in particular over a £500 million price-cutting programme.
Now, the diamond industry is a key source of tax revenue for Zimbabwe, but the country is struggling with lower than expected tax receipts. Zimbabwe's finance minister has said that if things don't improve, a virtual shutdown of the government could take place. Luke Shrego has the story.
Zimbabwe's finance minister left no room for doubt. Paying out national wages isn't leaving enough in the treasury for the government to function.
Out of every dollar that we are collecting, only 30 cents is going to other obligations on the government. So diamonds have to deliver. Otherwise, the only thing we'll be able to do is just to pay wages, and which means that government will virtually close down.
Zimbabwe had predicted profits of $77.5 million from diamond sales over the last 2 months. However, there's been no auction of the precious stones, and the unity government, split between President Robert Mugabe's ZANU-PF and Morgan Tsvangirai's Movement for Democratic Change, has netted just $19.5 million. Zimbabwe's already seen a decade of serious decline, and unemployment's running at 80%, strangling the national tax base. The nation's economy has seen a tentative recovery in the wake of 2008's violence-struck election, but there's a long way to go yet, especially if funding's to be found for a general election Mugabe wants later this year.
And we end with news that London is planning to bring its underground network into the 21st century at last, just in time for the Olympics.
Yeah. Now this is actually about being able to communicate while you're in the underground or on the tube, as they say in London, because I think a lot of visitors who go to London are surprised, especially if they come from a city like Paris, for example, that you can't use your phone when you're down in the tunnels, at least. But that's partly about to change. London Mayor Boris Johnson has said that he's signed a deal with Richard Branson's Virgin Media Group to supply Wi-Fi across the underground network.
How much is that going to cost, though?
Well, what's going to happen is, because the Olympics are coming up in July 27th, the Olympics starts. So Wi-Fi for throughout the summer while the Olympics are on will be free, which is good news. After that, you will need to be a customer of Virgin Media to be able to use it. So I'm still not quite sure how that's going to work for people visiting the country. Perhaps you can just buy a package or something like that. They've got to work out all of the details.
And that's Wi-Fi. It doesn't mean you can make calls.
Absolutely, you're right. It's Wi-Fi, so you can surf the net, you can check your emails. You still won't be able to make calls.
You still won't be able to let that friend know who's waiting for you at the other end of the tube line that you're running late.
You won't be able to call them up. Maybe that's a good thing. At least we won't have people constantly on the tube talking, hello, I'm on the tube. They'll only be able to sit and play with their screen.
That can be a pain.
Be good.
Absolutely. Looking at the positive side. Thank you very much, Matthew, for that business update. Thank you for watching. Stay tuned to France 24.